Legal position of taxes, difference between taxes and levies, conditions of tax collection, tax resistance, direct taxes, and indirect taxes. Legal position of tax. Tax has an important position in the public law system in Indonesia. Tax is a compulsory contribution imposed on every citizen, is coercive, and is regulated by laws such as the income tax law and the value-added tax law. This tax does not provide direct rewards to taxpayers, but serves as the main source of state revenue used to finance development and public services. Differences between taxes and levies. According to Thomas Summarson in his book Tax Law, 2022, the difference between taxes and levies lies in the characteristics and purposes of imposing the two types of levies. Taxes are mandatory contributions from citizens or business entities to the state that are regulated by law, with no direct reward for the taxpayer. This tax is used for public purposes such as infrastructure development and public services, so that the impact is felt by the community collectively. Tax collection can be national or local depending on the type of tax, such as income tax, PPH, which is regulated nationally, or motor vehicle tax, which is regulated by local governments. Tax is one of the main sources of state revenue used to finance various development programs aimed at creating public welfare. Retribution is a levy made by the local government as payment for certain services or permits provided directly to the community. Unlike taxes, retribution provides direct rewards in the form of specific services or facilities, such as waste collection services or building permits. Retribution collection is only carried out by local governments and applies locally in accordance with applicable local regulations. The proceeds from retribution are usually used to finance or maintain specific services provided by the local government, such as market maintenance or license management. Conditions for tax collection. To ensure that tax collection is effective and fair, there are several principles that must be met, namely justice, legal certainty, efficiency, and affordability. The principle of justice demands that taxes should be levied equally and proportionally. Legal certainty requires a clear legal basis for tax collection. Efficiency emphasizes that the cost used to collect taxes must be lower than the revenue earned. Finally, affordability means that taxes should be adjusted to the ability of the taxpayer. First requirement of fairness, equality. Tax collection must be done fairly, where each taxpayer pays according to their economic ability. This principle includes horizontal equity and vertical equity. Horizontal equity. Taxpayers with the same income level are taxed equally. Vertical equity. Taxpayers with higher incomes are taxed more, progressively, than those with lower incomes. This aims to reduce economic disparities in society. Second legal certainty requirement. Taxes levied must have a clear legal basis and can be understood by taxpayers. Legal certainty provides a guarantee that the rate, imposition basis, and tax payment procedures are clearly regulated in law. This is important so that taxpayers know their rights and obligations and reduce the potential for abuse by tax officials or uncertainty in payment. Third, efficiency requirement. Tax collection must be carried out efficiently, that is, the administrative costs incurred to collect taxes must not be greater than the amount of tax collected. The government must ensure that the tax collection process does not incur high costs, both for taxpayers and for tax authorities, so that tax revenue remains optimal. Fourth, economic requirements. Tax collection should not inhibit economic growth. This means that the tax policy must be designed in such a way that it does not significantly reduce the productivity or purchasing power of the community. The application of taxes that are too high can affect investment, production, and consumption, thus inhibiting overall economic growth. 5. Convenience requirement. Tax payment should be made easy and not overburden the taxpayer. Tax collection should be done at the right time, such as when the taxpayer has the ability to pay, for example when receiving a salary or when making a transaction. This will increase tax compliance and simplify the collection process. Sixth, elasticity requirement. The tax system must be able to adjust to economic changes, such as inflation, changes in people's income, or economic growth. This means that the tax policy must be flexible and can be adjusted to the developing economic conditions so that state revenues remain stable and in accordance with development needs. 7. Transparency requirement. The tax collection process must be transparent so that taxpayers understand how their taxes are used by the government. Transparency in tax collection can increase taxpayers' trust in the government and encourage active participation in fulfilling their tax obligations. Tax resistance. Tax resistance is an attempt by taxpayers to reduce, delay, or avoid their tax obligations. There are two main types of tax resistance, namely tax avoidance and tax evasion. Tax avoidance is an effort to avoid taxes in a legal way, for example by utilizing loopholes in tax regulations. Meanwhile, tax evasion is an act that violates the law, such as falsifying tax reports. This tax resistance has a negative impact on state revenue and can lead to sanctions for violators. Direct versus indirect taxes. Taxes can be divided into two types, namely direct taxes and indirect taxes. Direct tax. Direct taxes are taxes that are paid directly by the taxpayer to the state and cannot be transferred to another party. These taxes are imposed based on the taxpayer's economic capability or potential, such as income, wealth, or ownership. The main examples of direct taxes are income tax (PPH) and land and building tax (PBB). Example: income tax (PPH). Income tax (PPH) is a tax imposed on additional economic capacity received by taxpayers, both individuals and corporations, from within and outside the country. Income tax applies to various sources of income such as salaries, business profits, interest, and dividends. This tax is regulated in Law No. 36 of 2008 and has a progressive rate for individuals and a flat rate for business entities, which is 22%. Income tax is a direct tax because it is paid directly by the taxpayer to the state according to the amount of income earned. There is also final income tax with special rates for certain types of income, such as MSMEs. Indirect tax. Indirect taxes are taxes whose burden can be transferred to another party, generally the final consumer. This tax is collected by the seller or entrepreneur during the transaction of goods or services, then deposited to the state. Examples of indirect taxes are value-added tax, VAT, and import duties. Example: VAT, value-added tax. Value-added tax, VAT, is a tax imposed at every stage of production and distribution of goods or services, including when the goods or services are sold to the final consumer. This tax is regulated in Law No. 42/2009 with a general rate of 11%. VAT is indirect, meaning that this tax is collected by taxable entrepreneurs, PKP, from consumers and deposited to the state. VAT is applied to various goods and services except those exempted by law, and it is the end consumer who bears the burden of this tax because it is included in the selling price they pay. Conclusions. Taxes have a very important position in Indonesia's public law system as the main source of financing for state development. Taxes differ from retribution in that taxes do not provide direct rewards to taxpayers, while retribution provides rewards in the form of certain services from the government. Tax collection must fulfill the principles of justice, legal certainty, efficiency, and affordability to run effectively. However, there are still challenges in the form of tax resistance, such as tax avoidance and tax evasion, which can reduce state revenue. Taxes are also divided into two main types, namely direct taxes such as income tax, PPH, which is paid directly by the taxpayer, and indirect taxes such as value-added tax, VAT, which is charged to consumers through the price of goods and services. A good understanding of these different types of taxes is important so that every citizen can fulfill tax obligations correctly, support sustainable development, and create a fair tax system. That's all, and thank you.